Hey everybody, it's me, Gregory Mannarino. How are you today? I really want to know that. Let me know how you're doing today. Say, Greg, I'm doing fine. Greg, I'm doing lousy. Whatever. I hope to hear that you're all just doing great. And the reason why I have this look on my face is because the charade is playing out again in this market, and I want to cover that. So anyway, it happens to be Friday, November 16th, 2018. What am I talking about? Well, let's start off with this. The market is open for now just about a half of an hour. We started off reasonably deep in the negative. Dow Jones Industrial Average opened down triple digits. Well, as I am doing this video blog, the Dow Jones Industrial Average just went positive. Let's talk about why that is, what's going on here. First of all, this volatility in the market, I covered it yesterday, and I hope that put a perspective on a lot of what we're seeing in this market so you can understand what's going on and what's driving it. But a couple of other things going on here. We heard from the Fed today, one of the characters from the Federal Reserve, I'm not sure which one it was, spoke out sounding very dovish, like the Federal Reserve really should, slow down raising rates. The market loves this. Are you kidding me? And that's a lot in why stocks have rebounded like this, Oh, keep the drugs going, keep the drugs going, keep that easy money flowing, keep accommodating, even though we're in an economic boom, right? It's a joke. It is such a joke. All this is doing is making the distortions which exist in this market even worse. It's like that, a temporary high which will wear off at one point. And you all know this, it's insane. The Fed never had a plan to unwind this. QE to infinity, money printing till infinity, easy money into the infinity, and that's it. It's bizarre, okay? But again, the market's getting its little fix. Everyone's happy. The members of the COD are they're just loving it today. Let's talk about a couple of other things. Bond market is stable. 10-year yield about 3.09 as I am doing this video blog. The dollar's getting decimated right now. I'm not really sure what's driving the weakness in the dollar right now, but you see the setup here. I mean, bond yields staying more or less in a sweet spot. Dollar weaker. This is stock market positive. You all know that. And then the words from the Federal Reserve. Oh yeah, the market's. It starts. Oh yeah. It's too much. It really is. It just drives me nuts. Let's talk about the dollar real quick. So Morgan Stanley is warning people to dump dollars. Did you see this? It's on Bloomberg. I actually posted it on a couple of my social networks. I'm not sure what they are seeing here. They should be saying dump the debt. The dollar is a unit of debt. So I'm not sure what's going on here. The dollar has been in a pretty significant uptrend with all these geopolitical events that are occurring. Maybe they believe they're going to get ironed out. I don't know. We also understand that, the administration here, President Trump, has spoken out many times during the campaign and even after that he wants the dollar to stay weak. And this is, again, good for many reasons. International trade, it's really good for these corporations. Not so good for you, but good for the corporations that are involved in international trade. Having the weak dollars, no doubt about it. That's why they want to keep the dollar weak. That's why they want to keep easy money coming here. Because again, who's benefiting from this? Who's going to get hurt when all this normalizes? It's pretty simple. So let's talk about a few other things here. Cryptocurrencies are trying to turn around, catching a little bit of a bid here. Keep an eye on that. And with regard to gold and silver, with the dollar getting hammered, well, guess what? Gold and silver are higher today. Honestly, I'm shocked to see that because they look for every excuse to hammer gold and silver, regardless of what happens to the dollar. But again, let's watch this play out. It's just too funny. It really is. I'll be honest, and I don't know. I get a kick out of it when I see these things. When I hear, Fed. Look, why do they do this? And you know it. We've seen this over and over and over again. When the markets seem to be in some kind of turmoil, they float out a Fed official to say, hey, maybe we should do this. It's something, of course, dovish that the market's going to love. This is what you call a managed market. This is all they do. It's an incredible situation. We're not allowed to have a real market anymore. That's a fact. You all know that. All right, so look, I think I covered some important things here. What's going on? The charade, the COD. Stocks are higher. Oh God. I know. All right, look, I'll see all of you at the end of the day. Oh gosh. Bye.